All right, folks, welcome back to Are You Smarter Than a Libertarian, the show where we ask the dangerous questions nobody in Washington wants answered. And today's episode is sponsored by Jerome Powell and the Federal Reserve, the central planners. No, not officially. They just sponsor inflation, confusion, and the slow erosion of your purchasing power, which they have been doing since 1913. So now, let's talk about the latest move from America's favorite unelected economic wizards. Little spoiler, they're not as smart as they think they are. This week, the Federal Reserve cut interest rates again. They cut it by 25 basis points, which, for those who don't know what a basis point is, they cut it by 0.25%. That is Fed speak for we're nervous, but we're going to pretend we're calm over here, even though we're sweating through our three-piece suit that costs $4,000 or $5,000. This is the third rate cut in 2025, bringing total cuts this year to 175 basis points or 1.75%. Translation: the Fed spent 2 years flooring the gas pedal, overheated the engine, and now they are gently tapping the brakes while telling you everything is fine. No, the room is not on fire. It's just a little warm. Now, according to the Fed, this cut is about supporting maximum employment and returning inflation to the 2% over the long run. And that is the Fed dual mandate: maximum employment and inflation at 2%. Now, see, that's adorable. That's like the little kitty you're petting, but you don't realize the mama lion is right behind you. Because inflation is still elevated. Jobs are slowing. Ask anyone who's applying for a job. And the long run is bureaucratic code for after we retire. Now, here's what's actually happening, and you won't see this on MSNBC, CNN, Fox News, none of it. Economic growth is slowing, hiring is cooling, and unemployment is creeping back up. Look at the JOLTS report. And inflation is still hanging around like that guy at the party who will not leave even after you turn on the lights and turn the music off. So, what does this leave us with? The Fed is stuck. Cut rates too fast, and inflation flares back up. Hold rates too high, and the job market crashes, and burns. Now, welcome to central planning, where every lever breaks something, so it doesn't matter what you pull, they're going to break something. Now, let's talk about the famous Fed dot plot. This is a chart where Fed officials anonymously tell us what they think interest rates will be in the future. And they are, and pretend they are not guessing. They're throwing darts at a dartboard, hoping they hit bullseye, and they never do. According to the latest projections, rates are expected to drift down slowly, over the next few years, and settle around 3% in the long run. Now, that's a percentage point above target, but whatever. It's close enough. It's close enough for government work. Not zero. Not free money forever. Just enough inflation to quietly tax your savings while politicians swear it's good for you. You know how politicians love to say taxes are good for you, taxes are what we pay to live in a civilized society. No. Inflation projections were nudged just slightly higher. GDP growth projections were nudged lower, which is the economist's way of saying we are not panicking, but maybe we start panicking a little bit and sweating through our suits. And this is where things get really spicy, and I don't mean some five-alarm chili spicy. I mean spicy as your pockets are going to get hit and get heavy. Inside the Fed, they can't even agree with themselves. And here's the breakdown: the Fed has 12 members. 9 members voted to cut rates. 2 said no, inflation is still a problem, and they're the ones that believe it's tariff inflation. 1 said cut faster because jobs matter more. That's not a united front. That is your friend's group chat arguing at midnight, trying to decide what to do tomorrow. Even Jerome Powell, the spineless politician that says a lot but says nothing at all, admitted the labor market is cooling, but not cooling too much, which is exactly what someone says when they have no idea what comes next. And everyone else can see what comes next, but they think doing the same thing over again, something else will happen that hasn't happened in the past. And then we get to the balance sheet. This is the Fed, and this is a little inside baseball. The Fed buys treasuries and gives money to the government. For years, the Fed claimed it was tightening. Now they quietly admit reserves are ample, which means they are preparing to buy treasury bonds and notes again if needed. That is not tightening, that is reheating leftovers from a month ago. And we all know that they're bad by then. More liquidity, lower funding costs, and happier Wall Street. You see, Wall Street bakes the price of interest rate reduction in. Stocks wobble though, bonds rally, and Bitcoin refuses to die. Now, if you're wondering why asset prices keep floating while groceries stay expensive, congratulations, you are now smarter than the central banker. Because they don't understand it, and this is the problem with central planning. Now, let's add politics into this blender so we get the biggest shit shake you can ever have. President Trump is already talking about who should replace Jerome Powell when his term ends in 2026 because chair positions are staggered so that no president, unless he gets a second term, can put another chair in. The top names for this position are Kevin Warsh and Kevin Hassett. So we're going to get one of two Kevins. Great. Trump has made it clear he wants a Fed chair who talks to him about interest rates, which market here as independent central banking with a suggestion box. Trump wants interest rates cut faster. I'm of the exact opposite. I think we need to crash the whole thing and try again without a Federal Reserve. Now, this matters because the Fed is supposed to be independent, but in reality, it is politically adjacent, financially insulated, and is completely unaccountable. No one has ever really tried to pass an audit the Fed bill because it gets nowhere. Prediction markets, which is basically gambling, are already betting on who gets the job, which tells you everything you need to know about modern monetary policy. And I'm going to actually do a video on monetary policy and explain some of the things inside of it. So, but now you're asking, where does this leave us? The Fed cuts rates, but not confidently. It's like if you're going to be wrong, be confidently wrong. If you're going to be right, be confidently right. They signal future cuts, but not aggressively. They talk down inflation, but not convincingly to anyone who has a single function brain cell. They reopened the door to liquidity, but they did it quietly. This is not a master plan. This is damage control with bad PR, and people are starting to see through it. Now, libertarians have been saying this for decades. You cannot centrally plan money without distorting incentives. Incentives are how markets work. You can't manipulate interest rates without mispricing risk. You can't print money. You can't print your way to prosperity. It's like you can't tax yourself to prosperity. It's like Winston Churchill said, a nation taxing itself to prosperity is like a man standing in a pail trying to lift it by the handle. The Fed is not evil. They are just trapped in a system where every solution creates a new problem. And here's the thing, government has to create new problems so that they can keep justifying their existence. They don't want real solutions. And here's the thing, we're all the ones paying for it at the grocery store. Yes, gas prices are down, but we're still going to pay for it at the pump, in your rent, and in the shrinking value of your savings, although who really has savings anymore? No one really has savings. So this is the real question at the end of all of this. Is not whether the Fed cuts rates. The real question is this, and it is probably the most important question we need to ask for the remainder of the year outside of the Epstein files. If a handful of economists with models keep getting it wrong, why do we keep giving them control over the most important price in the economy, which is interest? That's the most important price in the economy because that determines where money moves to. But none of these economists, they all have PhDs, but they've never owned a business. Now, if this question makes you uncomfortable, congratulations, you're waking up. You might be smarter than a libertarian. And this is important. We need to have these conversations. Now, let's put a bow on this. If you enjoyed this episode, subscribe, share it, and leave a review. We are on Spotify, YouTube, Apple Podcasts, and iHeart Radio every Monday. And as always, stay free, stay informed, and stay accountable. Have a great day.